Welcome to Ask Fear and Greed, where we take your questions and do our best to answer them. I'm Michael Thompson, and good afternoon, Sean Aylmer.
Good afternoon, Michael.
Sean, today's question comes from Jo, and she has sent it in on LinkedIn. And Jo says, "Hi guys, love the show. Sean has mentioned several times there are concerns with super fund giants becoming too big in Australia. Most recently on Monday's episode, discussing the impact they are now having on IPOs and ASX listings. My question is, what are the long-term ramifications of this an investor might need to consider, and how will it impact the economy?" And Jo points out that she invests in shares on the ASX and kind of involved in Aussie Super. So I'd just love to hear a little bit more about this. And so, Jo, we are more than happy to oblige. Over to you, Sean.
Yes, Jo. It's a great question. So the long-term ramifications of super giants becoming too big. So Aussie Super and Australian Retirement Trust really dominate the game. They have interests in most top companies, and what they say matters because even the Commonwealth Banks and BHPs have to listen. But what if what they're saying suits their members' short-term interests and not the economy? What if the big super funds make the wrong decision? What if their focus isn't on what's best for society? Far too much power in too few hands. That's one big ramification. Another one, big local super funds are going to have a bias towards Aussie equities. We all like buying Aussie equities. However, what if there's not enough Aussie equities to go around? Well, these guys are ploughing money into the big stocks. They've got the potential of pushing the ASX beyond its fundamental value. If they rush off to invest overseas, which increasingly they need to do, are they experts over there? Not so sure. Another ramification is that big funds can cause the market to become too concentrated. Big super and private equity funds, throw them in there as well, they can go off and buy infrastructure assets like Sydney Airport, for example. They can't really buy a bank. They can't really buy big resource stocks. So what happens is that you end up with banks, financials and resource stocks dominating the ASX. 8 of the top 14 stocks on the ASX are either financial or resource companies. There's also CSL, Wesfarmers, Goodman Group, Telstra and WiseTech Global in that top 14. But really, you just have these mega cap stocks that are dominated in a couple of industries. You just don't have much choice. And that's a real problem for the sector. What happens if the commodity prices bust and we get a bunch of bad loans? Suddenly the share prices are going to dive because the resource stocks and the banks are going to dive as well.
All right, so that's the market. What about the second part then of Jo's question about how it impacts the economy? I suppose it would have a flow-on effect?
Yeah, I mean, I think the narrower the economy, the worse, in my view. So what happens, so banks and retailers are the two big employers, and more so than the resource stocks. What happens if the banks go wrong? Not bad, wrong. You could have all sorts of people out of a job, for example. Second, what if the big super funds underperform? See, we've had over a long term, we've had these industry funds, which are the biggest, performing really well. In recent quarters, the retail funds have been performing better, but we have many more people in the industry funds. Now, if those funds aren't performing, our wealth is not growing. So our superannuation, our retirement income isn't growing. That could be a problem. But the really big one, in fact, the Reserve Bank outlined this last week, is the risk to financial markets caused by big super. What they said, the sector's rapid growth, the rise in herding around common benchmarks, and increased exposure to margin calls means the sector's investment decisions and how much money they have, the liquidity puts in and out of the system, has a greater potential than ever before to amplify shocks in the financial system. So if something hits the financial system, because it's so concentrated, you get a couple of those big super funds to have to withdraw a lot of money to actually pay out people, suddenly you've got a serious shock in the financial system. And that's probably the big impact on the economy. The system just isn't quite as stable as it would have been if the risk is diversified. So broadly, in one word, the answer to Jo's question, diversification.
We could have saved ourselves, 4.5 minutes with that one word, Sean.
Yeah, probably.
It's a good answer though, and it's a big question. And it has come up a few times, just this week, because it does feel like it is a topic that is becoming more prevalent.
It's a growing problem too in Australia.
Okay. Great question, Jo. thank you for sending it on through. And remember, if you've got something that you would like to know, then send it through via LinkedIn, as Joe did, or Instagram, Facebook, or head along to fearandgreed.com.au. Thanks very much, Sean.
Thank you, Michael.
I'm Michael Thompson, and this is Ask Fear and Greed.